The second profit center of cash flow is relatively obvious because obviously you buy a house, you rent it out, you're going to get some cash. This cash flow is your rent coming in minus your expenses and leads to your NOI, or your net operating income. In this example, you rent a house for $1,000. All of our expenses, and we'll break down expenses in another video, $800. That leaves us with $200 into our bank of real profit. That's what our NOI is. Why is this important? Because when we're thinking about retirement planning down the road, we need to get a certain amount of money every month to pay all of our bills. It doesn't matter how much cash you have in the bank or in investments, you need monthly cash flow. In other investments, there's something called the 4% rule. Generally speaking, in stocks, life insurance, things like that, your investment can only give you about 4% a year without you having to touch the original principal. So for example, if you have $1 million in investments, whether in the Roth IRA, a 401k, a brokerage account, life insurance, anything like that, generally that can give you about $40,000 per year without making your $1 million go down, without burning your $1 million investment. So this is going to come into play when we start talking about cash flow, return on cash return, things like that. And you're going to see that this $40,000 a year can be generated in real estate with a much lower cash out of your pocket, creating this much cash flow.